Hey guys, this is Jeff, Swing Trade Warrior with WarriorTrading.com, back with the weekly close trade recap. We had a pretty big start to the week this week. I think Monday we locked up some trades that we were holding on to for a while. We took half position out of USO for a little over $1,500, and we definitely took $3,000 off our YNDX trade. And I'm going to do a post on how I managed those trades. They were longer term positions for me, but how I was able to adjust my net average net cost using options and other accumulation strategies. So look for that in the coming days. As always, at Warrior Trading, we do offer a 7-day free trial if you're interested in swing trading or day trading. Real-time alerts in the chat room and via text and email. We do education and webinars, all throughout the week, and we also offer education courses. But more importantly, at Warrior Trading, we really emphasize the knowledge behind becoming the required to become a successful trader. And so we really do trade the strategies that we teach. And you spend enough time with us, even in the 7-day trial, you'll see it's the same setups, the same things we're looking at all the time. And you're given all the information in real time as we're setting up the trades and executing them. So there's never any surprises, and you guys should check it out if that's something that interests you. Having said that, let's get into the trades. USO, so I've been position trading USO for quite some time now, ever since it started selling off back into summer last year. The first time I traded it, we made it was between $5,000 and $10,000 accumulating on the way down and selling on the spikes. We got this nice sideways pattern here through February through March, before we finally broke down and oil started putting in a lower low. And so we began accumulating again back in late February and all through March. We caught this move to the downside, kept adding to our stash. I don't like to over leverage myself in positions, so once I hit between $50,000 or $60,000 of my net equity, it's about 10%. I don't want to overextend myself in any one position. So at that point, if I'm not getting the move that I'm looking for, I can manage my position using options. And that's what I did in this trade, and that's what I did in some of the other trades. When you limit your account size, your position size to 10-15% of your total account, you protect yourself in many different ways. And for swing trading and day trading, any kind of trading, risk management is really critical. Not over leveraging yourself is incredibly critical, and so that's one of the things I focus on in all my courses, and also what I tell all my students and all our community members. Really what I do is not going to be the same from one person to the next, but you can still use the same techniques and still realize the same results. Everything is scalable the way that we have it set up. So USO, over the past few months, we've been accumulating. I didn't buy any puts this time around. I didn't feel the need to. I would sell weekly covered calls into the spike. I had 3,000 shares, and from about March 18th to this Monday, April 7th, we realized a little over 1,500 on our 3,000 share position. We just sold half when we had a point on the trade just to lock in the profits. My average on the trade is 1707, but I've been buying well over 19 on down to 16 to accumulate that average, and selling the calls. I get the premium from those. I sell the 20s. We haven't seen $20 on USO since way back in early February, so I'm not too concerned about which direction oil is going to go. It's a long-term play. We have the ability to be nimble in the trade because of our risk management using options, and so that's what we do. We are able to be profitable even while oil is trading sideways. And so we're in the trade for the bigger move to the upside, but nobody can call a top or bottom in commodities, and I'm not going to pretend to tell you that oil's going up from here. That would be ridiculous. I just don't know, but I do take advantage of the price action. And so we're sitting in oil right now. We're up about 1.5 on our last half. I'm looking to add to this trade over the recent highs at 2029, 2030. So I'm going to have I have a 1707 average on 1,500 shares right now, but I'm going to add another 1,500 back, because I think once we break this 2030 level that we saw back in February, we're going to get a move up to the mid-20s. And, if we're fortunate, and the recovery's strong enough, we could see $26 on USO. But I'm not concerned with that. I'm just holding my position now as oil keeps putting in higher lows and higher highs, and I'm going to ride it out and hopefully lock in a few thousand more dollars in profit there. YNDX was another big one. This was a monster pain in the butt for me. We've been in this trade, I've been in this trade since February 18th. I bought in after the earnings report. They gapped up, and we bought the high day run, breakout and run, and this test of this 50 moving, the test of this 50 moving average, which is this white line right here. Back then it was at 1814. It failed the 50 moving average, and it ended up selling off the rest of the day. Put in a couple attempts to bounce, and then we caught a downgrade on Russia. This is a Russian stock. It's a Russian internet company. It's like the Google of Russia. And so we caught a downgrade in the country as a whole. And if you look at 2 days after we got in the trade, the next 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 candles. 14 days in a row, this thing sold off. And I could not believe after their earnings release and some of the reports that came out that said that they were going after Google in court for some things, that there were just no buyers. So I was convicted in this trade, and I knew that it was being unfairly I felt that it was being unfairly pounded. So I was watching this $14, excuse me, let me zoom out here. No, that's it. Okay. I was watching this $14 level. Let me remove that line. If you look back in early February, it acted as support, put in a nice reversal at $14, moved all the way up to just over 18. So once we had the earnings, I wanted a continuation well into the 20s. We never got that. So we were stuck in the trade here, and I accumulated on the way down. I ended up with 3,000 shares, and it's not the most liquid options trading stock, but I managed my trade. I bought puts every time we broke a whole dollar to the downside. And I would sell calls on any green days, that we had in between. I only sold calls twice, actually, so it was the bigger of the green days. But I was buying more puts and using that, the profits from those on the way down. And I applied that to my equity, and we ended up lowering our average on the trade to from it was an $18 or excuse me, an $18, just under $18, 17 and a half, something like that. Back in February, we lowered the average down to $15.89 on this trade. So come last week, we started getting a nice pop, or at the beginning of April, we started getting a nice pop and move up in YNDX here. Let me zoom in. We put in some huge, big green candles as we started going parabolic, once again bouncing off that critical $14 level that acted as previous major support for the stock. We got a nice clean move to the upside, and now as of today it looks like YNDX hit a high of 1820, which I'm kicking myself in the butt for, because I sold out on Monday. Once I had profit on this trade, I was happy to be done with it. It was a trade that I'd held for about 2 months. I sold it for $3,000 in profit, and was more than pleased with that. I wasn't sure if we could continue this, kind of parabolic move to the upside here. It turns out it did, and so now it's trading at $18. So we left a couple points on the table. This could have been a $10,000 winner if I'd have held it. Shoulda, woulda, coulda. You can't trade like that. You got to take money off the table when you have it, and you will never go broke paying yourself. Just keep that in mind, folks. It doesn't matter what you think or what you know about a stock. When you have money that is more than you had previously, don't be afraid to pay yourself. Scale out, take some, take all. I was tired of holding this trade. I had $60,000 in this trade, or nearly $60,000 in this trade, for way too long. So I was more than happy to take it off the table for a $3,000 profit and move on to some other things, which is what we did. And one of those was Twitter. So we got in Twitter a couple weeks ago. We've traded it a few times. The breakout over the 4850, let me zoom back out. So this 4850 area was the first time we got into Twitter. After it gapped up from earnings, had been trading kind of above and below that area. We got a curl off the 20 moving average here, and it tested the 50 twice, excuse me, that 4850 level twice before putting in a huge green bar on March 24th. We doubled our position on that same day over $50, that huge $50 resistance, mental resistance level, and we scaled out our profits up through just about $52. I had an order to add even more size. Once I'd scaled out half the trade, I had 1,000 shares when I was full size in the trade. Once I scaled out half, I was looking to add back over 52, but we never broke that $52 level. We pulled in, and I had a profit stop in place, and ended up stopping out as a $1,500 winner in about 3 or 4 days. So it was a good trade for us, but I kept my eye on it because with the whole March Madness thing and all the news about their new advertising plans and plans to monetize or increase the monetization of their advertising, I wanted to be back in it for this test of this high at $56, $55.99 from way back here in October 2014. So I got long again on this trade. I got long over $51, which is right here. I got long at $51 on this trade. On this day, we put in this huge move to the upside. I had a double order, double spot at the previous highs, which was 52. Where did we come here? 51.87. So I got long at 51. I doubled over the 51.87, 51.90 highs from the week prior when I traded it, and I started scaling out on it. A huge move up to 53.30, and I sold half my size at 53.24, nearly the top of that day. So I was very pleased with that move up. I kept my last 500 shares at break even because I wanted to give it room again to test this $56 level. I was looking for another 2 or 3 points on the trade. Twitter had different things in mind for us. The next day it popped up to 53.50. Couldn't handle the heat, so it sold off. And once we hit our break-even stop, we ended up bailing on that trade. So not a big deal. We profited on Twitter 2 times in 2 weeks. We're just playing the charts here. We have catalysts in play all the time. This is all we do every day, every week, and that's how we maintain profitability in these markets. We use simple setups and technical analysis combined with basic fundamental analysis, and we're able to profit month after month. One other trade I'm in right now is Apple. I recently wrote an article for CNA Finance on Apple and how I've traded it this year 3 or 4 times with a 100% success rate. And in the article I talk about how I caught it over the breakout after earnings, the breakout over that critical 120 area. Once it hit the 120 area, we were in the trade full size, and we made a few $1,000s on its way up to 130. I bailed on this trade way too soon. I knew Apple had strength, but I didn't realize it had a 13-point move or 15 from our entry. So I didn't realize it would go that far. I took profits off the table when I was comfortable, and I ended up leaving a ton of money on the table. Shoulda, woulda, coulda. Once again, I'm not going to go broke if I pay myself, but I am super frustrated that we missed this move to the 133 high. So keeping an eye on Apple. After it sold off, there was a lawsuit where the judgment went against Apple. We came down and we violated the 20 moving average, and I wanted to accumulate somewhere around the 20 moving average or just underneath, because the 50 moving average for Apple is traditionally pretty strong. So Apple sold off, came down just above the 50 here. We got in the trade on the curl, candle over candle. We averaged in, scaled up over the 20 moving average at 125, and we sold through the move on up to 130, 129. Another couple weeks after that, Apple sold off, came down, tapped the 50 moving average, curled right back up. Once we got candle over candle, we got back into the trade, and we wrote it out through market chop, and we ended up selling in the 127s. So now Apple comes down again, and if you look at this pattern here, Apple is putting in, oops, no, that's not what I want. Give me this line. If you look at this pattern here, Apple is putting in higher highs, or excuse me, higher lows as it's moving through here in this ascending pattern to that 130 area, which we need to break out again, or which we need to see fall in order to break out again. So if you look, we got in Apple again early last week at the 125 area, and we scaled in through this move up. We had some super big market volatility last week. The whole interest rate thing kind of shook us up, and we wrote it out through the sell-off. We never got stopped out of this trade, and now it's curling, and with the Apple Watch sales, we're having another run. Looking to test the 128.50 area, and 128.50, once that falls, I think we can see the 129, 130 area pretty quickly, especially with the momentum from the positive reports of Apple's sales. So that's our fundamental catalyst in this trade. We're up on the trade a little over a point and a quarter, point and a half or so right now. We're full size in the trade. I don't know that I'll add any unless we get a sharp move over the next few days, next week. But I'll look to start scaling out around 130 if that area fails. So this, as of right now, is a 5. This will be, I believe, the 5th time we've traded Apple this year, and we're still 100% on it, just following the charts, looking at the basic patterns. Again, we do this every day of every week, and that's why we maintain profitability in these markets. We make it easy, and so if it's something you're interested in, check it out. We do offer a free 7-day trial. It doesn't cost you anything, and for those 7 days, if you can't make money with us, then I don't know that I can help you. But we would love the opportunity to try. If you have any questions, my contact info is below, jeff@warriortrading.com. And if you have any questions about anything talked about here, or just want to talk about the market in general, or have questions pertaining to anything else, just shoot me an email. I'll also put my Skype contact information down below, so you guys can get a hold of me. I'm always working and I'm always available. Other than that, I hope everybody has a good weekend, and we'll be back at it next week.